Should you add IBM to your dividend portfolio? Hey guys, I'm the Newb investor. Today we'll be screening IBM through my three metrics to see whether the stock is trading at overvalued, fair, or discount prices. And from there, we'll see if the stock is a buy. IBM is one of those stocks that has high dividend yield, and so many people are looking to buy the stock. But we'll see if it's worth your portfolio allocation at these prices. IBM is currently trading at 122.07 with highest price of 215.8 in March 2013. That's 43% from the highs. It has a market cap of 109.47 billion with PE ratio of 23.43. IBM gives out an annual dividend of $6.56 per share, a yield of 5.37% of the current price. With EPS trailing 12 months of 6.35, IBM's payout ratio is 103%. So guys, I think it's safe to say that if you're investing in it for the dividend, it's not a good idea. They're paying out more than they earn, basically. You might want to check their debt levels and their outstanding shares if they're increasing. I won't be surprised if one day they decide to cut some dividend. Let's proceed to our three metrics. First metric, we want an EPS multiple lower than 3. We get this by dividing the PE by the EPS, and we'd get 3.74. It doesn't mean it's not a buy, but by this metric, it is expensive. Next metric, we want to pay $1 or less for 1% of the money they're making. We take the net income yield and free cash flow yield from the current year, the averages of 5 and 10 years. The more data, the better, but in this video, I'll only be using 5 years of data just to show you our process. From there, we want to take the lowest value so we can have like a baseline for our assumptions. I also put in here the costs the company uses to keep the business going and to also kind of get a sense of how low or how high these components can get. From the 4 highlighted values, we take the lowest, which is 9.61. We use that to divide the current PE to get our discount of 2.47. What it means is we're paying 2.5 times their net income yield, which is basically telling us that we're buying $1 for $2.5 when we buy at these prices. Not a good deal. Third and last metric is historical PE. We want to get our discount on how the markets have valued the stock before, based on the PE. I took the data from a site which I'll put in the description box below. We have here a low of 8.6, high of 26.16, and average of 13.32, with which we'll use to divide the current PE of 23.78. Our discount is 1.79. So basically, the market is valuing the stock with a high PE right now. To conclude, IBM did not pass any of our metrics. Doesn't mean it's not a buy, but if you enjoy buying overvalued stocks, IBM is definitely one of them. Here are my entry PEs, 12, 14, 16. I think it's safe to say that the stock is trading at overvalued prices. Would I buy it? No. But if I were to buy it, I'd start a small position at $100, given that I've gotten through another metrics and their fundamentals. If you like to invest in these companies, I'd advise you to use a higher time frame of data, like 10 years of data. Also, look at the other metrics like long-term debt, current ratio, etc. As always, do your own research.